Hello, my name is Ron Little. I'm CEO of Wolfden Resources. Wolfden's a company listed on the Vancouver Exchange. We're focused on exploring and developing polymetallic precious metal deposits and nickel sulfide deposits in Canada and northeast corner of the US. We've got development projects as well as exploration projects and well-funded for this year's program. So look forward to telling you more of what we're doing here in this interview.
Nice to have you back, Ron. How are you?
I'm very well, Matt. Yourself?
Yep, surviving here. We had you back on the beginning of February, so I just wanted to get an update because we've seen a few press releases out and we've had lots of questions sent in as to where are you at with your various projects. So you've got 3 projects, right?
Yeah, I call them more 3 silos.
Okay.
I think we're most known right now for, call it our polymetallic silo in Maine. So we've got this really the highest grade VMS deposit. So it's copper, lead, zinc, silver, gold. It's 4 to 5 million tons of close to 20% zinc equivalent, which is double the average grade of most production. And so we're drilling that to make it bigger, and we're also in the early stages of pre-permitting the project in Maine, because this is the first project to build a mine in Maine in quite a few years.
Well, that's the big ticket. I mean, that's the big issue, Ron, isn't it? I think for some people, they're waiting for you to get that permit through. So what more can you do, or what more do you know with regards to timing?
Yeah, I've been encouraging investors to call is just everybody has to be a bit patient on this. When you're the first company in 30 years to build a mine here potentially, we're really educating the public on modern mining techniques, because when you look at what was mined 40 years ago, companies went bankrupt. They didn't have proper tailings, and they left a scar. So they've left this image that, small companies go bankrupt and leave a problem. This, ironically, is going to be one of the greenest mines, of the modern era. Dry stack tailings, underground only, water filtration. So, this is not going to be like what it was from the past. On top of that, all the money has to be put up front so that no matter what happens to the company, the state is not left with an issue. So we go through a 2-step process. We rezone to allow mining in a remote area, because there's really nobody around us. We own a big plot of land, and the mine is actually on our land. We own the mineral rights, and there's no houses, there's no permanent dwellings for miles. So you couldn't pick a better place to build a mine. And the rezoning we thought would take a year. It's likely going to take 2. We're halfway through it. And that's going to be a big milestone, because we go from rezoning into full permitting. And that's a typical permitting process with a full baseline study feasibility. So we've used essentially a PEA, or a preliminary study, to get through rezoning, which is all you need. It's it's a high level approval that the state is welcome to mining. And I think once we get through that, it is going to be a big milestone for our story, because now there's going to be a much higher level of comfort that we'll get through the permitting process as well.
Okay, so let's dig into that, because it's really important that we understand it and you deal with it. So the rezoning process, you thought it would take 1 year. It's going to take 2. You're halfway through. So what did you think back then? What have you learned, and why are you confident that it's going to be 2 years, not 3?
Well, I think COVID did get in the way, right? As soon as we applied, basically, we got into a COVID situation. So all the regulators have had to review the project in a more complicated way. And that includes meetings and site visits. And so that probably has added 6 months to the equation. Then the nature of the preliminary study, it causes you to stop and do other little studies to show that the preliminary design is going to work. So it comes down to the water, the soils, the tailings design. So the natural question is, can you show us just a little more science behind that design? Whereas if we had a full feasibility study in our hands, all of that work is in your hand. So it's a balance. We don't want to spend essentially the $20 million required to do the full feasibility if we don't get a permit at the end of the day. So we're trying to do this with 2 or 3 million to say the concept works, then we'll go and spend the 20 million on the full feasibility.
Right. So the green component, as you outlined, sounds expensive. You've got dry stack tailings. Did you say underground? Is that
Yep.
Yeah. And you've got a water filtration, and you've got to put money up front. I mean, talk us through all of that.
Yeah. So, I mean, it all comes down to when you've got high grade, you can afford to do the greenest mine, right? So, let's say the dry stack tailings would add $1 per ton to your production costs. The water filtration, which basically you can, drink out of the pipe when it goes back, filtered into the ground through an infiltration pipe, much like a septic field would do. So nothing pours out the pipe, it gets back into the groundwater. And then, the filtration would add 50 cents to 75 cents a ton. And then the infrastructure to go with it adds a little more CapEx. So we have the benefit of doing that by having such a high margin on our grade. And this is why mines often operate near, the level required by the regulation, because they're trying to maximize, the profit of the mine. And we've got the benefit of, if we put up 15 to 20 million up front as the reclamation and closure costs, we still get a return of over 40% IRR at lower metal prices than where we are today. So that's where, the economics are in our favor when you've got that high grade.
And does that mean you don't need to have a sort of like a remediation bond or reclamation bond?
Yes, that's exactly what we're talking about. So in Maine, you put it into, essentially, they call it a trust, and it's managed by the Department of Environmental Protection. So that way, if at any point in time they decide we're not meeting the regulations, they can basically shut us down. And the worst case is we're going to draw on that fund and close it up and make it back to what it looked like before.
And that'd be your responsibility, not the province.
Well, I think if they shut it down, they would probably manage it themselves. The bottom line is there is enough money in the trust to do all of that. And that's the reassurance to the public that they're not left funding the closure.
Are the directors of the company held culpable or responsible if something does go wrong? Or is it just, there's a bond, that's all we need to worry about?
Well, I think that's getting a little bit deep. Like, nobody is out to cause an issue.
Sure. Keep
in mind that, the whole premise of the new mining code in Maine is that, they really want to protect their water, right? That's the number one concern, because Maine is all about hiking and fishing and the environment. And the water standards are you have to return the water to the ground the same quality as it comes out. And we are totally comfortable that that's going to happen. Like, the water filtration plant is not new, and they're used on other industries. Now, it depends on what level of filtration you run it at. Obviously, we're going to run it to the highest standard. There's even a reverse osmosis in the system. So it's going to be clean. And when you put clean water back in, as directors of the company, we worry less, because we're not going to let it run with anything less than the standard, right? I don't think it's not in our mind that we're going to, have the DEP come and shut us down. We're going to be monitoring that water on a daily basis. Okay,
Pickett Mountain, you've got one drill going at the moment. To what end are you doing a resource update anytime soon?
Yeah, actually, great question. We've been drilling in the footwall to try to identify more tonnage. And as part of that, we're really trying to unwrap the geology. So to do that, you update your three-dimensional model. So certainly you can expect us probably within the next quarter to come out with an update on our model. And that would include drilling from 2 years ago. Yeah.
Okay, interesting. So again, I guess the point is to what end? I mean, what are you trying to show the market there? It's polymetallic. You said it's high grade, it's underground, 10-year life of mine, but you're nearly 50 million market cap. no one's really listening. So you need to do something with that, and help people understand what the end game is there. So how do you do that?
Yeah, I mean, that's call it the secret to trying to build up a junior company to a producer, right? I mean, what you're really saying is, Wolfden's a 50 million market cap. The mine is 150 million to build. How do you get your market cap to over 150 million is the secret sauce. So, you do two things. You drill to show it's bigger. And on a parallel path, you proceed with permitting to show that you can get a permit in Maine. And that's exactly what we're doing. And the permitting to us, we're going to take our time to make sure we do it right, because, it's important to Maine that this project proceeds because it can afford the greenest situation. Like Maine could actually say, we drove the highest standard and now there's a mine. We're setting the trend worldwide that this is the kind of mine people should build and run. It's environmentally as friendly as it gets. So that path, whether it takes us 4 months or 12 months, we're not as concerned. And then on the drilling, we've only had one drill running since March. And it's been tougher, with COVID to try to get, drilling in that northeast corner, because Maine has just not been a mining state. And a lot of the mining boom has come back, and most of the drillers and the drills are Nevada and Alaska. So it's a challenge to try to, build our crews. And of course, making more discoveries will certainly then the drilling companies will say, hey, let's put a drill there. We see a mine coming. So it feeds off of itself. So you do need the discovery effort to go with the building effort.
Right. So, but that's still the flagship project. Yep. Okay. Yes. Right. So let's talk about the other two, because I want to understand how you get at this. So let's go for the one you couldn't tell me much about at the beginning of February, which is Big Silver, because you still wanted to either option or tie up some land packages. So what's been happening since we spoke? Yeah,
so you're right. We were cryptic about even where it was in Maine. We've been focused on we optioned a plot of land. It's got 100 holes with all of them mineralized with silver. It is still a polymetallic, but it's not a VMS deposit like we have at Pickett Mountain. It's what would have been probably a big open pit deposit, but it's got really high grade silver components. And that's what we're focused on for Maine, would be the underground, but more bulk mining. And it's virtually a model that's untested, and it's in the right rocks. And then we noticed we have the same potential rocks in our New Brunswick projects across the border. So now this is what I call the silver silo. We're focused on potentially high-grade silver deposits, underground in Maine, open pit potential New Brunswick, and one deposit's going to help the other with our modeling. And so we're getting both of those ready to drill late summer, early fall. Okay. And that's, investors have been more focused, let's say, on silver and gold in the last 6 months. And, this adds a whole new dynamic to our story, that we've got this, precious metal silo and lots of indication that there's more in the ground.
Okay, so just give me a bit more then, because I'm not quite sure I picked it up. So it's got 100 holes. Have you done any drilling? Sorry, did you say?
Not yet.
No,
not yet.
Okay,
no.
So what you're reinterpreting some old data?
Yep.
Right.
Exactly.
Okay, and you raised $4 million in March. Are you going to be allocating any of that towards Big Silver?
Yes. Yeah. Absolutely. Yeah, we've got about $6.5 million in the treasury, and I'd say more than likely we're probably going to spend at least a third of our budget on the silver stories, right? And these could take on a life of their own. Like, I think back to your leading question, we've got, really call it the Pickett Mountain base metal polymetallic silo. The silver silo could take on a life of its own. We may end up having to spin one of these out, because you can't have sort of 3 company makers in one junior company. And that's really our goal here, is to develop all 3 in the short term Like, we're going to be able to run the nickel, silver, and base metal this year and be able to be in a position to potentially spin one of these out.
Or two.
Yeah. I mean, it's a bit of a nice dilemma to say which one's really going to take off. And I think, the difference is, like, let's come back to reality. The Maine story is a development story, and it's a mine building story, which really doesn't get your average, exploration investor too excited. And it's got a lot of our time and our focus on it. That's something you don't spin to somebody else. Like, it's going to take us to, our involvement to get this through the permitting process, which, there's 2 or 3 of us with our hands on that. And even I'd say if somebody came in to take us over because we've got through rezoning and now there's a belief we can build, you generally keep the 1 or 2 guys around that have been the face of the company with the regulators, with the state. I mean, that's a very common thing.
Okay. Let's come back to that point about spin-outs in a second, because I just want to finish off on Big Silver and then get onto the nickel component. So with Big Silver, obviously it's very topical, right? Silver has been very topical. And at the time we were talking about it, silver was doing particularly well. It was top of the agenda for a lot of people. How much does that cost you in terms of, how much did it cost to acquire, how much have you spent on it? So let's start with that.
Yeah, we've optioned the mineral rights there. So it's like any option, it's not costing a lot for the first couple of years. So right. Our goal is to put the money in the ground. We earn our way in, and we ended up with a database that was not digital. All those 100 holes, we had to build the digital database, right? Now that we've done that, we're about to get on the ground to do some mapping, some sampling, and we'll drill a few holes to verify the previous work. And then we're going to springboard from there. And then, of course, we've talked to the neighboring property owners to get their permission to work on their land. And it's this Maine is unique is that people own the mineral rights. You don't go stake a claim. And so, it's a win-win usually for the company to say, let's do some geophysics, some mapping. If we're going to drill a hole, then we'll come back and try to come up with an agreement on the property mineral rights. Okay. So that's where we are. Yeah.
So with that option, what are the terms? I mean, how much money do you need to spend over how much time? And can at any point during that option period, you bring in a partner, or do you need to spend the money before you can farm it out or spin it out?
Yeah, we haven't really discussed the terms of that deal, but I'd say, we've got to be in the ballpark of spending about $5 million to, complete that option. And, that's over a 5-year period, right? It's not a huge burden for us if we're successful in the first round of drilling. And again, it's the money's going in the ground. It doesn't go to the prospector. They have some annual payments, but it's they're in it. The final win for the property owner, or the owner of the mineral rights rather, is that they get a small royalty in it, of which we can buy back all of it in some cases, and that's where they get their payment. Is sort of the when this goes to a production, if it goes to a production scenario, they have a win as well.
Okay, so that's obviously much further down the line. So there's some small annual payments to them, but their real win is through NSR or equity in just NSR on the production when it happens.
Yeah,
so,
exactly.
Okay, so it's quite a long-term play for them, if ever. But they continue to own it. So what have you actually optioned then? Just the ability,
the mineral rights.
Just the mineral rights. What does that mean?
Yeah. So basically, let's go back to Maine. When you buy land, it comes with the land, timber rights, and mineral rights. And sometimes landowners split mineral rights and timber rights. And so by having those rights, you get access to the property, either to cut the wood or to mine the minerals. And so, there's probably well over 1 million acres in Maine where the mineral rights have been split and various other people own them. So when in this case, we came up to the project, we were approached by the person that owned the mineral and the mining rights. So we optioned those. And then now we looked at the land and said, this is a much bigger geological story here. Let's explore 3 or 4 times the package to make sure that this is actually the best part of the ore body. So our preliminary work is really mapping, soil sampling, geophysics, just to make sure that, there isn't another ore body out there. And then we'll zoom in on not only drilling the known resource, we'll very likely, I'm expecting that we're going to find other targets that we're going to want to drill in the area as well.
Okay. Let's talk nickel and then let's come back to spinouts. Okay, so you've got 2 nickel projects effectively. So again, where are you with those since we spoke?
Oh yeah. So on the nickel, we drilled in March into early April. Some of that drilling, we were right at the tail end of the winter season, and it got warm, and equipment, we had to cross the ice, etc. So we had to stop early. We really only got in half the holes. And out of those holes, we have indication the deposit continues at depth, and we didn't have the opportunity to drill the bigger step outs. So we've been modeling that system, and we've also been modeling the second nickel project that we have. And that modeling is going to be very important to showing the value of those projects vis-a-vis if we're going to spin them out. The person that's going to be interested in investing in those or in the asset directly needs the technical model. And so those models are well advanced at this moment, and our intention is to go back this fall or winter to drill both Rice Island and the Nickel Island deposits. And they're 2 slightly different geological models, but they're nickel sulfide, and they're roughly about a 1% plus 1% nickel equivalent.
Right. Okay. So, and they're of a size which starts to become interesting to people as well. So this is probably, is this your preferred spin out, really? Because it sounds like Big Silver's early days, right? You need a bit of time, a bit of money spent on that one. So this is the spin out, really. So how do you move this forward? Yeah.
So 2 things. How do you qualify this deposit? Like you're bang on, these are real deposits. Okay. They're, as you said, Big Silver is an exploration project, to be defined. How big is the ore body? We know that, in our minds, even though there's not a qualified report, we're seeing better than 5 million tons of volume as a rough model for both Rice Island and for Nickel Island. Okay. So, and if you look at a 1% plus nickel equivalent, this puts both projects in the 50 to the 100,000 tons of nickel. And that's sort of the number that the nickel market is looking for. So now, to us, that is the obvious first spin out, because we've been looked at for VMS, polymetallic, now some precious metals. The nickel has really now got attractive because of the EV market and the lack of good nickel deposits. And there's very few juniors that have advanced projects like this. So this is the one we're basically packaging it. We're still pushing ahead. Like, I think if we spin this out, there's still some involvement in it with us directly because of the time we've put into the region. And the goal is to see if we can attract either an investor into a wholly owned subsidiary, and at some point we might roll that into another advanced nickel story. So the guys who are calling us are not just, call it, investors in mining projects. There'd be nickel guys saying, hey, what are you doing with those assets? Why don't you roll them into our project, right?
I was going to say, how do you advance it? Because there's still a little bit of work to do, and you don't necessarily want to be, continually raising money. It's kind of dilutory. I mean, are there any solutions out there?
Yeah, no, I mean, so 2 things. The model leads to what's the value that's there today. Like when you look at 2 juniors, or a junior with a nickel deposit like one of ours, it's typically about a 40, 50 million market cap. And we've got two of them. So that gives you to me, this is up to 100 million of value that's being overlooked in Wolfden. And with those models, we could say to investor, why don't you invest directly into a subsidiary? We will cause a liquid event later. So they'd put up the money to do the next round of drilling, next round of modeling, and we're not going to issue any Wolfden shares. And at some point in time, we either IPO it or roll it into another deal for X amount of shares in that new company.
Okay.
Right. Okay. And then the new investor gets their pro rata share, and the Wolfden gets their pro rata share, and it's up to us whether we keep that or dividend it out to our shareholders, right?
Okay, so that's clear, because I think it's clear from the questions being sent in to us that people weren't quite sure what you do. You seem to be, 1 minute we're talking, Z-Link, copper, PGMs on Pickett Mountain. Then we're talking silver. It felt like you were going to segue over to silver, and then you got nickel. What you're saying is 3 distinct silos, your word. Nickel is a definite potential spin out.
Yep.
There's a bit of work to do on big silver. It's early days, but a fair bit of work in terms of resource update. You've done the PEA there on Pickett Mountain. You know how you're going to progress that forward. So that's very much your focus, but you've got these projects off to the side, which again, how you're going to tackle those. Is that what it is?
Yeah. Yeah. I mean, let's sum that up. There's 3 silos. One is, call it an EV market, right? Like it's a really nickel's up, EV is hot. 2 advanced projects where there really aren't many advanced projects in the space. Very easy to package that up, advance it, whatever. That's the easiest spin out. The development story in Maine with Pickett Mountain, when that is permitted and ready to build, I don't doubt a bigger company is likely going to come and say, Ron, you can finance that maybe on your own, or why don't you merge with us? We'll build this together with a bigger balance sheet. The silver is really the pure upside story. It's got a lot of big project potential. It's in the silver space. It's not going to take us a lot of funding to advance it. And, we know from the drilling that's there, when we start drilling that, we're anticipating some pretty good holes. So that kind of is the exploration upside really in the short term for Wolfden.
Right. Okay. So, but again, just to be clear for people, maybe getting distracted by key buzzwords here. So nickel, there's a plan. There are conversations. It is hot at the moment. You're right, but you're not going to be a nickel company. That will be a spin out or farm in or some solution which will benefit Wolfden shareholders. Big silver, it's early days. So you're not necessarily a silver company yet, but you're going to work out if you are. The focus is absolutely still, on Pickett Mountain.
Correct.
Brilliant.
Correct. Yeah.
Nice and clear. Yeah. Okay.
Only took an hour to get clarity, so apologies on that.
Well, it's just people get distracted by buzzwords. You mentioned silver, and some people lose their minds and go, "This is now a silver company." And you've been really clear with us on this occasion, because you couldn't say much last time we spoke to you about where that's at. And nickel is exciting at the moment. So again, I want to be clear in terms of conversations. So you've had a few inbounds, you've had a few conversations around that, but you and the board are yet to decide the best way forward with that, or the one way forward with that. There's lots of options on the table. That's what you're saying. Yeah,
I mean, in reality, all exploration companies are incubators of their projects, and you inevitably you become who you are. You're defined by your best discovery, right? So even though we've got 3 silos, we've really got 3 company makers to get there, which, everything's about protecting your downside and your investment. So here you can sort of buy Wolfden at 30 cents when we really think it's a $1 value stock, right? And all those 2 other silos, whichever one you think we spin, those are going to sort of add that value to your investment. So, and it's to come over the next year. Like we're going to unlock this value within a year. And I think that's a pretty short time frame for an investor these days.